Thanks for watching. This is James Robertson with WorkSpace Real Estate. Today, we're going to show an analysis of a property that my client sent over. He is looking for an industrial space for about 5,000 to 15,000 square feet of space. He sent me this email over earlier today and wanted to not only set up a tour to see this property, but he wanted to understand whether or not this is a good deal or not, and look at properties around it to make sure that we're including all of our options. So let's get into it. When we look at 21316 in New Caney, this is a 7,000 square foot facility. He found the listing on LoopNet, which a lot of people look at. Unfortunately, LoopNet does not have all of the options, so they show you some, but not everything. Another thing that LoopNet is missing is the analytics. This is about all the data you get. So you know the commission splits, you know the price, the size, just the broad strokes, but we're going to dig a little deeper. So when we look at CoStar, which are the systems that we use, we can see it sitting on 4.88 acres here, which is a nice footprint. Okay, and it looks like it has multiple buildings. Here it says the first building is 6,000 square feet, and the second building is 1,000 square feet of space. So that's good for my client. It offers more flexibility and plenty of land for them to put things on here. So I want to go into the analytics to talk about the market. When we look at the market where this property is located compared to the Houston market, which is the yellow line, for months to sell, Houston takes a shorter period of time to sell property than this part of the market, and this has been trending upward. So this is good for my client because it means the market is slower up there as of December of 2016. The market's slower and it looks like it was trending upward, which means it's taking more time to sell property, and we should expect a softer price point compared to the Houston market. Now on this chart, when you look at the average sale price per acre, you can see that the Houston market is averaging about $800,000 an acre, whereas in New Caney, where we're looking, the market for land itself is substantially less, about 500,000, and it's been trending down from last year substantially. Another very good sign for my client on getting a great deal. Because remember, we're looking at this for an owner-occupied property, so we're not trying to purely have it as an investment vehicle. This is a place for my client to operate his business from. So lower prices are good for his bottom line. Okay, so here's the most attractive bit of analytical data that I think we can talk about when I'm analyzing this property. So this is the average sales price per square foot for the actual building itself, or in this case, the two buildings. When you look at Houston's trend, we started in 2012 at 70 bucks a foot on average, went down quite precipitously down to $30 a foot between 2012 and 2013. And you can see it's been a pretty it's been a trend upward to a high of $100 a foot for a Houston market, and then they've dropped down to $60 a foot for industrial space. That makes perfect sense when you look at the energy crisis that we just went through and the large amount of businesses that left. This smaller submarket has seen a similar trend, but they're more advanced in their decline. They didn't go as high as Houston got, but they're definitely feeling the impact. I'm estimating that we're going to see an increase in 2017 because we're just seeing a lot more people looking at spaces. But for now, this is a great time to buy because we're definitely on a downswing. We're not at the lowest it's ever been, but look at where we are in 2015. This is the lowest it's been in the last 4 years. So that's very significant. From a purchase perspective, this looks like a great time to look at this property. So as far as this sales price here, I would anticipate there be some flexibility here. I think we do need to move quickly on a spot like this. But let's go ahead and look at the rest of the marketplace just to kind of wrap things up. Now here's everything else that's available. I already did the search to save you guys some time. Here is the area I just wanted to get a really wide swath. If you look at industrial space that's 5 to 15,000 square feet, that's less than $1.2 million. We have 9 options to choose from. Here are those 9 options. Okay, I'm going to take out the ones that the image is not shown. But these are comparable buildings in this market, all grade level industrial buildings, mainly 1 story, all of them sitting on about 1 to 4 acres of land. So these are very nice comparable options, with the exception of maybe 2 of these. There's a lot of actionable properties here. Most of these are going to be investment type properties, which means we'd have to kick out a tenant if you purchase them to owner occupy it. But about a little bit less than half are owner occupied properties here. So I hope this information was helpful. If you guys need information on the marketplace, we always love talking about commercial real estate. So thanks for watching.